Hello everyone, a very good morning, good afternoon, and good evening to all of you. This is your host Vaibhav. In today's session of Daily Stock, we are going to consider the Alphabet's earnings for the third quarter of this financial year, that is 2023. The numbers were good if you compare it to what the company was earning last year. The earnings were good, but you can say that from the perspective of the investors, not good enough. The expectations were higher, and in comparison to that, the earnings, particularly in the cloud segment, the earnings were on the lower side. And I'm saying comparatively speaking, because if you look at the absolute numbers, the double digit growth is there in the revenue year on year, and that is quite an improvement if we look at the revenues for the same quarter of last year, which were not growing that fast. And several initiatives were taken by the Google along with other tech companies earlier in the year, which were kind of follow up for the cost cutting measures announced in the 2022, and these have yielded results with operating margin improving for these tech giants. Google is an no exception. For the Google also, the operating margins have improved, and that has also added to its valuation in the recent past. If we look at the graph of the Google share price, it has been going up and up since the start of the year. And even if we consider the drop post the announcement of the earnings, even taking that into consideration, it is still trading higher by more than 50 percentage points. So the growth has been there, and this has been generated mainly because the company has been able to improve its operating margin. Now the question is about future, if it is going to be competitive enough in the AI space, where the other tech companies like Microsoft seems to be leading from the front, and the Google is still playing catch up. The cloud segment is crucial for the AI abilities, and there the Amazon and Microsoft have lead, and the Google has also been spending efforts to achieve some sort of competitiveness. It is a important player in this space, and it is trying to improve and gain market share. And to that extent, the game is still open, the race is still open, but it is going to be a field task, of course, to catch up with other leading players. Nonetheless, if we look at other avenues of revenue for the Google, the ad market has been rebounding, and that has helped its ad revenue rise. And if we consider the other segmental results, the numbers are looking promising enough. These are the figures for the third quarter of 2023, where the revenue growth of 11% is visible for the quarter ended September 30th, and the net income has risen substantially with almost 50 percentage point growth in the EPS. So there is a remarkable achievement, and that is also reflecting to some extent in the elevated share price of the Google in comparison to the share price prevailing at the same point of time in last financial year 2022. Moving forward, the Google is expected to continue to do well with these initiatives to improve operating margin continuing to bear fruit, and we can expect the ad market to remain strong in the coming quarter. So the forward guidance is also on the promising side, and that has contributed to the rebound in the share price of the Google. After its initial drop of around 7 percentage point in next subsequent session, the share price has been trying to regain the lost ground. Even in today's session, there was gap up and it is still trading on the higher side. And I'm expecting it to trade back to where it was prior to the earnings and in course of time make a new swing high. Now, if we look at the segmental results, we will get a breakup of revenues for the Google. Let us go to the segmented results. This is the consolidated statement of income, and here we have the consolidated statement. But for us to get a clearer picture, we need a segment-wise result. All right, here it is. The Google services has contributed of around 68 billion US dollars. The Google Cloud is bringing in 8.4 billion US dollars, and other bets it is still in the loss. It is not making money in net terms. If we look at the operating income of the other bets, which include its self-driving unit as well, Waymo, it is losing cash. It is spending money, but it will take time for it to turn profitable. But other segments, particularly these Google Cloud, has turned net positive for the company, which was not really the case in the last financial year, where the company was still ramping up its capabilities to compete in the cloud segment. Now its margin is improving and it has been able to turn it around and make it profitable, but only marginally. It is still wafer thin. The cash cow remains the Google services, which has brought in almost US dollar 24 billions for the company in the last quarter. Then, if you want to go through the fine print, you can access these earnings release from the company on its investors relation page. So I won't be taking you through the report point by point, but we saw the highlights, key developments for the company and why the share price reacted the way it reacted and what lies ahead. And as we have considered the fundamental side, we also have to see how things are shaping up on the technical side to see if there are emerging opportunities for us to exploit in today or in coming session. This is the Google share price for last couple of weeks. It was trading close to 140 level for couple of weeks prior to the release of these earnings, and it went tumbling down. It declined substantially for the next two trading sessions. From there on, it has turned the corner, and since then, there has been no looking back. And I am quite hopeful for the Google share price to eventually cross above this prior swing high. So that possibility looks strong given the way it has continuously climbed higher. Now, let us see how things are for the medium term to long term. For the daily chartist, the trajectory has been bullish. If you had simply gone with a simple strategy of buy on dips for most part of this year, it would have worked. And even in this time, when there was sharp drop in the share price following the release of earnings, even from that drop, there has been a strong rebound. And I feel in light of its improvement in the margin and generally conducive environment in the tech space, we can still go with the buy on dip strategy for next couple of weeks, or you can say next couple of months, unless there is any fundamental shift in the markets. We can continue to trade with optimism of continuation in this bullish trajectory. The Medium term to long term trajectory at the moment remains bullish, and here if we look at the share price of the company from where it was last November, it has climbed up around 50 percentage point, but I still feel there is room for it to run higher, and we can count on it to try and cross above this immediate swing high. So keeping that possibility in mind, for next couple of weeks, we can go for a buy and dip strategy, and even in the short term, it is going to be a better idea to stick to long trades rather than try to look for short sale at the current juncture. For longer term, we have these sharp moves in the Google post this COVID pandemic where the use of tech enabled use cases rose manifold, and that catapulted the valuation of the tech companies. And now here we have the Google almost trading thrice of what it used to be pre-pandemic in 2019. And in this change environment, I still feel that there is room for it to run higher, continue to run higher, but it is likely to spend more time in consolidation phase. So instead of shooting and rising fast beyond these prior swing high, we can expect it to consolidate in next coming months, and we can take advantage of that consolidation while adopting a buy on dip strategy. So whichever way you look at it, short term, medium term, long term, all three possibilities are pointing northwards for the Google, and we have to only think about finding favorable risk reward ratios because no bet is 100% safe. We indeed have to keep in mind that our anticipation can go wrong. So, as to factor in that possibility, we have to try to reduce our losses and optimize the profit. So, that's all from my side for today's session. If any of you have any query or any idea to share, do write to me in the feedback, and I'll be more than happy to take the discussion forward. Thank you all for